Stock Saxoft Limited. Now it's up 6% today. It was up 20% on Friday. They've done an acquisition. The management is now joining us on the phone line. Mr. Aditya Krishna, founder and MD at Saxoft Limited. Aditya, firstly, congratulations on the acquisition. Could you just tell us what is the percentage stake that Saxoft is acquiring, which is the company, and what edge will it give to the company?
Yeah, great. Good afternoon, and thank you for this call. We have acquired 60% in Dream Orbit, and this has been done to strengthen our offerings in the digital space. Now, just to step back a little bit, the reason why we've done this acquisition is because we believe that the IT market, after a very long time, is changing. Deal sizes are getting smaller, and it's more of a level playing field for specialized companies like Saxoft. And our strategy has been to acquire companies in the digital space. So a few years back, we bought an analytics company called Accuma. 2 years ago, we bought a company called 360 Logica, which was in digital testing. And now 60% in Dream Orbit, which is specializing in cloud mobility and with a special emphasis on IoT, which is device-to-device connectivity. So overall, the reason why we're doing this is to strengthen our offerings in the digital space so that we are the preferred digital transformation partner for our customers.
Right. What will be the cost of this acquisition? What's the sales of this company?
We have bought 60% of the company for 17 crores. The company is currently at a run rate of 35 crores top line.
Right. In terms of, the overall money or EPS accretion that it will do, so is it a profit-making company? Are margins as much as Saxoft?
Saxoft currently operating at a 15% plus EBITDA margin, and Dream Orbit, which is the company we've acquired, is around 20%. So overall, this would be positive for the group.
Right. In terms of the opportunity that it gives, so currently it will not lead to any, client overlapping, or it will actually open up new opportunity to even sell existing products of Saxoft?
Absolutely. So Dream Orbit specializes in the logistics and transportation space. So there are no overlap of customers. It will be a brand new set of customers who we can cross-sell Saxoft's offerings and vice versa. And like I said, very excited because it's the IoT space which is seeing a lot of attention by CIOs globally, and Dream Orbit's really good at IoT.
Right. Do you also have an option anytime in the future to buy out the remaining stake?
Yes, there is an earnout over the next 2 years to buy out the balance 40% with the founders. But till then, the founders stay with the company, and they are very technically very strong. So their team plus the founders of Dream Orbit will really help the delivery organization of the group.
Right. The 70 crore number that you told us is only for 60%, right? So in the future, the valuation will be decided on the basis of this transaction, or that time the understanding between the two promoters?
No. There is first of all, it's 60% for 17 crores, not 70 crores. And the balance, there is an earnout. So it's based on future EBITDA margins as well as absolute EBITDA. So it's all put down in an earnout.
Right. Let's just talk about the business and the company. What has been the growth rate of this company? Has it been very, very high, and still the opportunity to scale it up is high? So double-digit growth rate would continue?
Yes. So Dream Orbit's been growing at over 20% year on year. In fact, they've been ranked 3 years in a row in the Deloitte Fast 50 in India. And I don't see any problem in continuing 20%, 25% growth rates for Dream Orbit.
So, Mr. Krishna, who are the clients for Dream Orbit? Can you tell us which geographies it operates in?
Yeah, 95% of the revenues come from the US geography, and they deal with mostly transportation and logistics companies, marketplaces for transportation and logistics and trucking. And that's a huge market. Over $500 billion of IT spend in that market. So in terms of market share, very small, but lots of opportunity for growth.
So the company is in Internet of Things and also sources hardware. They have products for specific hardware. So is there any risk to the hardware, the vendors not providing in time, or a cost escalation there?
No, the company doesn't do any hardware. It's only when I say Internet of Things, it's device-to-device connectivity. So we write the code or the software. The sensors are embedded in the devices, and the electronics are embedded in the devices. So the whole idea is to see how device-to-device connectivity can happen through the code. We can analyze data, collect data, and make informed decisions.
Right. Is there any scope in domestically in India as well? Given that when the GST comes, there will be an impetus on logistics. Any clients in India?
A company doesn't have any clients in India. There is a lot of potential in India, especially with GST. You're right, and also because of the advent of e-commerce companies. All the e-commerce companies are spending a lot of money on logistics and delivery and optimizing it. Unfortunately, we don't focus on the Indian market. Our focus is only the US and the UK market because 95% of our revenues come there. And for the time being, that's where it's going to be.
Right. For your company, the offerings and the products that you have, what is the growth like? What can we expect in terms of your like-to-like revenue growth for this financial year?
We don't, as a rule, give guidance, but organically we are growing, and now with the DreamOrbit acquisition, quarter-to-quarter growth is going to be very positive, and I see very positive momentum with DreamOrbit and also organically for the Saxoft Group.
So if you could also just tell us about the digital opportunities here in India with the sort of move that we are seeing, is that a big focus area for the company?
No, currently, like I said, our focus is the US and the UK geographies, because we really feel that those markets are very deep. There's much more opportunity to, make revenue in those geographies rather than the Indian geography. You're right. I mean, with what's happening in the economy in India, there is a lot of opportunity, but it's a question of, how do we maximize or optimize our resources. And at the present time, the billing rate, the depth of the market is much better in the US and the UK.
With dollar index going up, probably indications that, US economy may grow faster. You expect a lot of business to come in from there, the growth to be much faster than what the street is anticipating now?
Yes, I mean, if you've seen the Fed raise rates, they're expecting 2% growth in GDP in the US. Definitely the US market is going to lead IT. IT is hot right now, and I don't see why Saxoft and DreamOrbit can't also be hot.
Right. You mentioned in the start that, the deal size is getting lower and lower, the average deal size. And how do you think the Indian IT industry would adjust to that?
Like I said, I think after many, many years, there is more of a level playing field and you see that in all the media, in CIO interviews, that the big billion-dollar deals, the multi-million-dollar deals are becoming less and less. Deal sizes are getting smaller. Customers are becoming less risk-averse. So what that means is companies like Saxoft and DreamOrbit have a more level playing field. And for the first time in many years, there is a lot of opportunity for specialized companies like us. So I see us being able to, compete with the tier one players much more aggressively than before.